Mark, there's been a lot of volatility in financial markets. What's going on?
Well, I think the moves we've seen in the markets actually have unsettled a few people, and people are worried about the volatility is the phrase that people use. I actually think looking at it, it's been actually not nearly as volatile as it could have been. When one stands back and looks at where we are in the world, we're coming back. We're still in the recovery ward from a near-death experience 5 years ago, and the authorities around the world, particularly in the West, have been very, very strident and taken big moves to try and make sure that financial markets stabilised and that the economy could start to grow again. And these have been largely successful. The unfortunate thing, a consequence of this, though, is that debt levels continue to rise. And if they were high 5 years ago, they're even higher now. And that, I think, means that from investors' perspective, that any slight aberration or something that's just not immediately good news has quite significant potential to derail markets in a meaningful way. And in fact, bearing in mind what we've seen is signs of a slowdown in China, even some signs of slowdown in some of the Western economies, that the fact that markets have fallen as little as they have, I think is quite encouraging. Which is not to say that I'm bullish, it's just saying that I can easily get overexcited about what appears to be, in the absence of anything else to talk about, a lot of volatility in markets. Yes, in the emerging markets you've seen some quite big price falls, but here, the market hasn't moved that much, and I don't think that people should be overly concerned at the moment.
Should investors be more cautious in their asset allocation?
I think when we've seen periods of movement in the markets like we've seen, then people, obviously it's a good opportunity to stop and take check of what's been going on. But I think for a number of years now, I've taken the view, and I would hope other people have, that one should have a very conservative and cautious approach to one's asset allocation. Once one has got that right, try not to get too caught up in the emotion of outbursts of volatility in the markets. We're in a situation where most people are planning for the long term, and what we're seeing at the markets at the moment I don't think should upset what should have been well thought through plans from a few years ago. There aren't that many places to go for income in the world, and equities represent good value. Yes, they can go up and down in the short term, and right now we've seen them falling. But when you look at the bond yields that are available, and indeed the yields available from investing in property, equities represent a very sound place to go. And I think once one's made one's allocations, one should largely just sit there and then grin and bear it when it's not good and enjoy it when it is.
Mark, what's the outlook for financial markets then?
I think where we are now and trying to form a view for what we should expect over the coming months and quarters and maybe even year or two is I think we're going to see a continuation of very similar behaviour patterns that we have thus far. There is still huge commitment on behalf of the Western governments to do whatever is necessary, is the phrase that's used, to try and ease the economy keep forward momentum going, keep asset markets in stable prices and so on. And every time we see a period of volatility like we've seen, we'll see a lot more rhetoric about, well, we'll stand ready to do whatever is necessary. And yes, there are question marks about, well, how infinite is this ammunition locker? How many times can they keep producing more firepower to try and solve the problem? And ultimately, no one knows the answer to that. I think least of all the politicians and the bureaucrats who are coming up with these statements. But in terms at a time when inflation still seems to be at very low levels, when the bond market seemed to be still quite well supported at very low levels of yields, when the cost of borrowing are very low, then I think it's just as I can sit here and on the one hand be worried about the levels of indebtedness, and I'm extremely worried about the levels of indebtedness, but I also respect that one could still be having these conversations in 5 years' time, and that to have retreated to the sidelines could be quite a damaging thing to do in the context of looking after one's wealth. So I sit here and I look forward to a future that I think for at least the next few quarters and year has got lots of danger, lots of scope for volatility, but in the scheme of things, am I going to do a huge amount about it? Probably not at the moment.